So today I thought I would give a brief overview on Alphabet. Share rose this Monday about 2% in the morning, extending about a 3% rally on Friday after reports Apple has opened up talks to use Google's Gemini models to power a revamped Siri. Bloomberg reported Apple asked Google about building a custom Gemini model that could replace parts of Siri as soon as next year. Market reaction reflected the potential commercial tie-up between the two. I have to tell you, just this is anecdotal. Obviously, the last several times I asked Siri something, the answers were not so good. So I would say Siri does definitely need an upgrade. And Gemini does sit near the top of the benchmark list for language and multimodal tasks, while Alphabet has moved kind of cautiously on its AI strategy. The talks come as regulators examine Google search deals with device makers. A U.S. court may rule soon on remedies that could affect search placement agreements. It's interesting times for both companies. So I thought we'd look through our current coverage on Alphabet, just generally at present. Again, Alphabet should need no introduction. It's a holding company, holding Google, the internet media giant. As a wholly owned subsidiary, Google generates 99 point something percent of Alphabet's revenue, of which about 85% is from online ads, search, YouTube ads, and Google networks. The fast growing Google Cloud now accounts for about 14.1% of revenues. The company is considered an AI leader. So let's look at the recent quarterly financials here. We can look at Q2 2025 total revenues. Alphabet reported relatively strong revenue growth. Total consolidated revenue is $96.4 billion. That's up 14%. Earnings, the company's net income was $28.2 billion, 19% increase year over year. Diluted EPS grew faster, 22%, up to $2.31. That surpassed analyst estimates. Operating income also saw a solid increase, up 14%. Cash flow and capital expenditures, we'll talk about this a little more in a minute. This quarter was marked by significant increases in CapEx expenditures, which rose 70% year over year to $22.45 billion to fund aggressive AI and cloud infrastructure investments. As a result, quarterly free cash flow saw a 61% decline to $5.3 billion. However, trailing 12 months cash flow remained at $66.7 billion. So some of the positives on the investment thesis here: continued strength in search. One of the worries with the boom in AI is Google search, but search delivered double-digit revenue growth in the quarter. AI overviews now has over 1 billion monthly users, and AI Mode, the new end-to-end AI search experience, has over 1 million monthly active users in the US and India. While Google's search market share is decreasing slightly, it still holds roughly 90% of the market. We can see here, if you go back to July 2025, 89.6. This is just the latest figure. And then if we look at January, if you go back to January, it's about 89.7%. So a slight downtick there. And the year over year, it is down from 90.8. So Google search and other properties revenue accounts for, again, 57% of Alphabet's total revenue. It's a very important part of the business, something that we monitor closely. Google Cloud, the rapid expansion and profitability here. Their cloud was a standout performer, with revenue surging 32% year over year to $13.6 billion. The segment operating income more than doubled, increasing to $2.8 billion, and significantly expanding its operating margin from 11.3% to 20.7%. Let's look at further positives here. AI's impact on the business. We talked about this. Their CEO talked about this in the quarter. It's positively impacting every part of the business, driving strong momentum. New features like AI overflows and AI mode in search are performing well, and more than 85,000 enterprises are now using Gemini, driving 35 times growth in usage year over year. There's good momentum. Good momentum in YouTube and subscriptions, which showed strong performance. YouTube Shorts revenue per watch hour in the US now earns as much as traditional in-stream ads, and in some countries it even exceeds that rate. So areas to watch here for Google, certainly. Significant increase in capital expenditures. We talked about this. They're increasing their expenditures, their CapEx expenditures for 2025 to approximately 85 million. That is up from the previous forecasts of around 75 billion. Aggressive investment, again, is to support AI development and cloud infrastructure. We talked about this significant increase in free cash flow. Still generating strong free cash flow, however, over the past trailing 12 months. But again, this continued investment is to remain a leader in AI. It's likely a smart decision and comes from cash on hand, not debt with no dilution. That is important to remember. Overall, the company continues to add cash. The regulatory environment is a concern here. Alphabet faces a complex and escalating regulatory environment, particularly with ongoing antitrust lawsuits in both the US and Europe, targeting its dominance in search and advertising. In the near term, this could lead to significant fines and court-mandated changes to its business practices, such as being forced to divest parts of its ad tech business or alter its contracts with device manufacturers. In the near term, this could be a negative. In the long term, there are some arguments to be made a major unfavorable ruling could potentially lead to a forced breakup of the company, which would fundamentally restructure its business model and operation strategy. Again, in the immediate term, the reaction of a forced breakup would likely be negative due to the uncertainty. There's long-term thoughts, though, that many analysts are now leaning towards the possibility of positive outcome. Maybe it's because they own the stock, but I mean, there is some history of this in the past too. That would potentially unlock significant value in its high growth segments of the business. May potentially that could outweigh the loss of synergies, especially if the new independent companies become more focused and agile. Some analysts point to the breakup of AT&T, where the baby bells, or companies that were forced to split from AT&T, actually outperformed the market for years, even decades after. However, the final outcome would heavily depend on the specific terms of the breakup and the ability of each new company to thrive on its own. So in conclusion here, Alphabet is a high-quality tech giant, leadership in AI, strong number 3 position in the cloud, and resilient search business with reasonable valuations relative to its peers. We can look at the valuations here on a forward PE basis. Now, how does that compare to the historic 5-year valuations on the stock? About average right now in terms of PE and price to cash flow. It was significantly below just 3 months ago, as we can see right here. That was a time where we're aggressively telling clients to buy. So fair value, likely in the range of 224. It's starting to approach that, slightly under right now. That would be a multiple of around 21 times a 2026 estimate. Okay, and that closes off. But interesting news certainly today. I mean, it's not been confirmed, but interesting news from Bloomberg that there could be a partnership for a revamped Siri. It's Siri. Siri isn't that what's his name? His kid. Tom Cruise's kid. All right, doesn't matter.
I have no idea.
I honestly have no idea either.
I know, but yeah,
on the topic of
interesting news.
Of Google. I mean, well, on the topic of Apple, since you brought up Siri, yeah, you're right. Siri needs a huge revamp. It's really falling behind, and Apple has taken heat for really falling behind. It's not even in the discussion right now in terms of the AI race. The discussion is really Microsoft, Alphabet, Amazon, and Meta. Those are the 4 big players, right? So Apple's got to get in. But yeah, I mean, with Alphabet, you're looking at a company which is certainly one of the leaders in the AI space. Double-digit growth, cash flow, reasonable, like great valuation. I mean, notwithstanding the regulatory risks, you have this huge regulatory overhang, which is real, and it's more than what you would normally expect of the Mag 7, which is where there's always a lot of regulatory risk. So it's real regulatory risk, but obviously a lot of it is factored into the price, because if you didn't have that, you would not have a company trading like with Alphabet's fundamentals trading at sub 20 times earnings.
Yep. Excellent. Yeah. Any further on that, or?
I was just going to say, like,
Yeah.
I remember this was probably, or this was
because you did
like,
some work, Brennan, on the regulatory
exactly. I was just going to say, like, for people to take a look at our blog, where I did, look at essentially just like the antitrust cases, both against their search and search advertising side of the business. Again, I think I'd be more a little bit worried about the search advertising than the search side. Again, when I first started doing, the due diligence, I didn't even understand or didn't even know that it was, two different cases really here. But one thing that I did want to mention is as well is just, I remember, back in late 2022, we had, Google as one of our recommendations, I believe, in one of our DIY webinars. And we ended up getting an individual reaching out to us who had attended that webinar, basically saying, that, we're, how the heck could we be recommending Google? It is, horrible business, and this was down when, it was trading at about $100 per share. I wish I could find that email of this individual, saying this. I lost it somewhere. But, like, just look at what the stock has done. It's up over 100%. Just looking at, an individual that was seeing the stock price go down, over 2022 when there was this tech sell-off, essentially, and they were emotionally like, wow, the stock price is going down, bad recommendation. Meanwhile, we're telling our clients, okay, the valuation's getting attractive here again. We should probably be positioning ourselves longer term. And again, this is a business that, we're not looking to hold for just 1 year. We're looking, 5-10 years out. That's just really kind of what I wanted to add as well.
Yeah, for sure. I mean, and good quality businesses, when they come on sale, that's when we like to add, for sure. Mm-hmm.